Welcome, everyone. It's a pleasure to be hosting today Simone Krummaker, Andreas Klasen, and Margherita Mariani here in our studio. So, Andreas and Simone recently authored a white paper which explores the reinsurance demand of export credit agencies. And I am actually pleased also to say that Swiss Re has been supporting this project, and we have here Margherita, who is one of our credit and surety underwriters, and as such she's been supporting these type of organizations in the last years. The white paper explores the reinsurance demand of export credit agencies, and they do facilitate exports and economic growth, oftentimes on behalf of their governments. So can you maybe start by explaining really why is this question so interesting?
Yes, sure. Reinsurance offers three core benefits to insurers. The expansion of underwriting capacity, but also substitution of risk capital are two of the main and most important ones. That means by ceding risks to a reinsurer, an insurer or any other institution can actually take benefit of these implications, of these effects beyond the actual just risk transfer, and taking opportunity of the reinsurer's kind of worldwide risk spreading. Another very important factor of reinsurance is knowledge transfer and information. And by this, insurers get access to the expertise and the knowledge that reinsurers have.
In fact, and despite their very special character, we have export credit agencies that are already existing reinsurance clients. However, we notice that on top of the expected differences between private insurance and export credit agencies when it comes to reinsurance buying behaviors, there are quite substantial difference among ECAs themselves, and that's why we ask you and Andreas to help us understand what are the main drivers behind such buying behavior.
And it was quite an exciting research question for us as well. As Simone just mentioned, what are the drivers? We know a lot regarding the corporate demand for insurance or reinsurance, so there's a lot of research. There's some research regarding how export credit agencies behave and what are maybe demand drivers for exporters regarding their demand for insurance. But there is a significant research gap if we think about what drives demand of these export credit agencies regarding private reinsurance.
Your study highlights how the operating model of an ECA also does impact their reinsurance demand, in particular the level of government support that this export credit agency enjoys. Can you maybe elaborate a bit on that?
So, the export credit agencies are important tools for the government. They create or facilitate trade, and they also support foreign direct investment. But the level of support from the government differs. So, for example, number one, the ECA might have a direct obligation or a commitment where the government is basically taking the risk. So we see that, for example, in Canada or in Germany, where there is a direct obligation of the government. Number two, the export credit agency might be an independent agency, but there is something in the law, or for example, a letter of commitment from the government, what we call full faith and credit for the agency. But sometimes, in particular, if we have younger export credit agencies or agencies in middle-income countries, you don't have that full government commitment. So we have a lack of full faith and credit. And that, of course, that's one of the results of our research, is a driver for private reinsurance demand, which is quite significant. However, we have to say that even in high-income countries, we see the benefit of private reinsurance for the export credit agencies for different reasons, like diversification, real services, and I'm sure we cover that in one of the next questions.
And so, Andreas and Simone, from your study on the insurance and reinsurance, specifically demand by export credit agencies, which main differences have you seen between private insurers and export credit agencies in terms of reinsurance demand?
One thing is that we don't see with ECAs is the effect of finances or financial strength, so to say, which is very relevant for private organizations or private companies as a driver for reinsurance. And this is not as relevant for ECAs, for example, in this case, which might be due to the fact how they are organized, how they are tied in with government support, mandates and authorizations. Another one also is that regulation isn't as important as a driver for reinsurance as it would be with private companies. Again, there it would be sector specific. There are some very highly regulated industries where we do see that this is a driver. Again, due to the very specific global regulatory framework that we have with ECAs and AXIMs, this doesn't seem to be such a contributing factor to drive more or less demand for reinsurance. Interesting, though, is that size indicates professionalism of risk management in companies as well as in ECAs, but size doesn't necessarily say it all. So what we do see is that the more professional the risk management is within an organization, also within export credit agencies or Exim banks, that means that they have a better idea about their risk appetite, where peak risks are, frequency versus severity risks, and then this can drive reinsurance, but maybe doesn't. So they have a better idea about where their risks are, and that can sometimes mean they want more insurance, or it can also mean that they need less reinsurance because they have a better managed risk.
So indeed a very dynamic landscape. So I'm actually interested in hearing what does that mean for the relationship between export credit and agency and reinsurers. In your opinion, Maggie?
Well, I truly think that in this context, reinsurance can be a strong growth enabler for export credit agencies. And in order to be a successful tool for export credit agencies to grow, of course, it needs to lay the foundation of a strong partnership. And in order to achieve a good and strong partnership, there of course needs to be exchanges and knowledge in terms and trust foremost in terms of how underwriting is conducted. We clearly aim at profitable underwriting results, which are an element to ensure long-term partnership, but also, of course, a strong alignment of interests of the parties involved.
Now I'm really wondering, so we speak of future challenges and also the related strategy shifts. Climate change and digitalization are high on everybody's agenda. Do you see, Andreas, Simone, anything in your study that really substantiates a need for insurance arising from this agenda?
Yes, definitely. We do see that the green transition and challenges around climate change, but also digitization for ECAs and EXIMs themselves increases the need for, let's say, support with knowledge sources, data and information, and reinsurers are in a perfect situation actually to support them in that one with the expertise that they have already built around, let's say, the climate change, green transition, data sources that have been built. And this is a very valuable source also for ECAs who are being faced now with these strategic challenges and also would be able to take opportunity of the knowledge and also of the technology of reinsurers here. For example, also to tap into claims management support, rating and underwriting resources. Some of them are already doing this, and you might see this themselves, that they join your workshops and your seminars, taking opportunity of the research that you publish. But this might, particularly with these specific challenges of climate change, green transition, might need even more support. And we think the knowledge transfer in this area is a big driver for reinsurance demand. I
think a lot of inputs come from your paper. I'm wondering really now, what are the policy recommendations or best practices that you could condensate out of the interviews and the research that you did?
If we take into account what Simone just said and also what we heard from Margherita, I think 3 areas regarding implications and recommendations are crucial. So the first one is about the strategic partnerships, the collaboration. If export credit agencies would work closer together with private reinsurers, they could significantly benefit from the market knowledge, we just heard that, also from the market intelligence of the private players, but also really better train their own staff, because that leverages, of course, the skills and the expertise as well. So it's about strategic partnerships and knowledge transfer. The second area is if we think about the technology and also the innovative product offering. Export credit agencies are quite often smaller entities, so they don't have the capacity to significantly invest in artificial intelligence. So that's something where they can benefit again if they think about collaboration with the private market. So it's about artificial intelligence, predictive analytics, and also about jointly developing innovative products, for example, regarding the green transition, because you need huge capacity, it's more risky markets, it's more uncertain, so this is another benefit. And last but not least, also if you think about claims management, again, if you think about data sharing, if you think about the opportunity of joint claims handling guidelines, that would be beneficial for the public players. But it's not only the benefit of the export credit agencies we also see the benefit for the private reinsurers, for example, a broader portfolio, for example, regarding this joint innovative product development, but also regarding tapping more into the public sector, I think would be useful. So long story short, I think a very important contribution to knowledge, but also to practice what we have here. And we are delighted that hopefully a lot of people will read the working paper and benefit from the outcomes.
Thank you very much. That's actually very good to hear that there's really concrete best practices out of this study. So I'm really looking forward to see the recommendations from your paper being put in practice.